Welcome back, traders. This is our weekly update on the gold market. Gold stabilized in the past daily sessions, with traders remaining in a wait-and-see position as the market's focus turns to new matters and events. Anyone following the gold market knows that the precious metal could move abruptly and unexpectedly in any direction, undertaking large movements without notice. Now, this report will be focusing on the current market information that could affect gold's price, but also upcoming economic data that may motivate traders to take action. Our technical analysis at the end will give us a more in-depth view of the price action. Our aim is to give a descriptive and informative fundamental and technical analysis. At the moment, the main focus of the market turns to the vaccination process and the circumstances surrounding the ongoing pandemic. Gold had reacted significantly to the virus and its effects in the past year when it climbed to new all-time high levels. Since then, the correction lower has been evident, yet the subject continues to create volatility for gold, in our opinion. In the past days, it was confirmed that the US has already provided over 110 million doses of COVID-19 vaccines to people. This is a figure that is expected to increase substantially in the following months and could help the economy's recovery process speed up. This is not the case for all countries, however. In Europe, the vaccination process continues to be moving on a rather slow pace. In the past days, headlines of a dispute between the EU and the UK surfaced, with the media labeling the matter as a vaccine war. We must note Europe is currently seeing a third wave of increased cases. Furthermore, a swarm of media reports has hit the scene over AstraZeneca's vaccine and its safety. Some say the vaccine is safe, some say this is not the case. Yet the overall confusion over the subject has already hit the public. We believe the global vaccination process is being tested at the moment, and anything unexpected that could disrupt it could create a major setback to the global health system and the global economy. In this case, we would expect gold traders to react accordingly, and we may see a soaring gold price. Overall, the vaccination process remains a very sensitive matter at this point. Moving to the US dollar and its relationship with gold's price, we can confirm that the US dollar is stronger compared to our last week report, according to the dollar index, which monitors the greenback strength against other currencies. But the same can be said for gold, as its price has risen since last week. Thus, the correlation of the two seems to be strong and positive. We must note that today in the US session, Fed Chair Jerome Powell is expected to give a virtual testimony on coronavirus aid, relief, and the Economic Security Act. Traders will be on the watch, thus caution is advised. Finally, in the next days, we have a plethora of financial releases that gold traders can use as a strategy foundation. On Wednesday, we get the preliminary PMI readings for March from Australia, Japan, the UK, the Eurozone, Germany, France, and the US. The combination of all being released on the same day could provide extra volatility for the precious metal. On the 24th, we also get the US durable goods figure for February, while on the 25th, we get the weekly initial jobless claims figure. On the 26th, we get the US consumption adjusted and the University of Michigan sentiment final for March. We move now to our technical analysis. Please note, this is gold's 4-hour chart, and gold continues to trade in a sideways motion between our R1 1755 resistance level and the S1 1720 support barrier for the past 10 days. If the precious metal is undertaken by selling interest, then below the S1 we have noted the S2 1700 round number level that was briefly reached on March 12th. Our S2 is also a psychological threshold for traders, and its strength could determine what traders will do next. Yet, lower we have also noted the S3 1680 barrier, which is also imminent as it is the lowest point reached so far in 2021. In the opposite direction, if an uptrend arises and gold surpasses the R1, the road could be set for the R2 1775 to become a target. Even higher, the R3 1795 hurdle could be noted if the bulls are motivated to keep their positions. Yet both the R2 and the R3 are levels last seen in February and are not relevant to recent price action. The RSI indicator below our chart is currently running nearby the 50 line, implying traders may be unsure of the price direction they should take at the moment. This could also be perceived as a sign of patience for traders, as a sudden move could provide opportunities not seen previously. Now that's the end of this report. We hope you liked it and found it useful. If you liked this video, please feel free to share and subscribe. Until the very next time, ladies and gents, enjoy solid trading.